Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are mixed today. Dow Jones is up. Nasdaq and S&P 500 are down. Russell 2000 is up 0.5%. Oil prices are down $1 to $65 per barrel, and Treasury yields are down a few basis points across the curve. Heat map shows Nvidia, Broadcom, and other chip stocks are down generally today, pulling the markets down, especially Nasdaq and S&P 500. Oracle, Palantir are also down. Tesla is pretty much flat going into the earnings release tomorrow, and everything else is mixed. Any questions, comments, you can leave it in the chat. Musk's XAI working to raise up to $12 billion, Wall Street Journal reports. Elon Musk's AI startup XAI is working with a financier to secure up to $12 billion more for its expansion plans, the Wall Street Journal reported on Tuesday, citing people familiar with the situation. Valor Equity Partners, an investment firm whose founder Antonio Gracias has close ties to Musk, is in talks with lenders to raise the capital, according to the report. The money would be used to buy a massive supply of advanced NVIDIA chips that would be leased to XAI for a new massive data center meant to help train and power AI chatbot Grok, the Wall Street Journal reported. XAI and Valor did not immediately respond to Reuters' requests for comments. I think it's pretty much similar to CoreWeave, I guess. Trump says Fed's Powell will be out in 8 months. U.S. Fed Chair Jerome Powell is in a numbskull who has kept interest rates too high, but he will be out in 8 months, President Trump said at a news conference on Tuesday. I think he's done a bad job, but he's going to be out pretty soon anyway. In 8 months, he'll be out, he said in a meeting. Powell's term as Fed Chair runs through May 15, and he has repeatedly said he will not leave the post early. 8 months run until mid-March, and it was not immediately clear why Trump picked that time frame. Interesting. Trump has been hammering at Powell for months for not cutting rates and has frequently raised the possibility of ousting him, while also saying that firing him would be unlikely. Dollar's dive offsets tariff sting for some U.S. bellwethers. A slump in the dollar has come to the rescue of some major multinational U.S. companies this earnings season, easing the sting from President Trump's tariffs that have driven up costs and upended financial planning. A weaker dollar enhances the value of foreign earnings of U.S. companies while also making American exports more competitive. Companies such as Levi Strauss, Netflix, Pepsi, and 3M, which generate significant revenue from overseas sales, reported a boost to their April-June earnings or raised their annual forecast due to the slump in the dollar. The greenback has lost about 10% this year due to the rapidly changing U.S. trade policy and worries about growth and ballooning government debt. Last week, Pepsi, which relies on international business for about 40% of its total net revenue, forecast a smaller annual profit drop helped by a weaker dollar. Rival Coca-Cola said on Tuesday its annual comparable earnings per share is expected to be near the top end of its target 2 to 3% rise, helped by a softer greenback. The whole point of Trump's plan is to try to get the dollar weaker in order to try to increase international sales for U.S. multinationals, said Robert Pavlik, a senior portfolio manager at Dakota Wealth. I don't know about that. It's probably a good course of action. All right, we got the gist of this. China's exports of rare earth magnets to the U.S. surge in June. China's exports of rare earth magnets to the United States in June. Yeah, this is interesting. So I see that Zachary Perlinsky reposted this stream, and you can help the channel grow by liking or reposting either on X or on YouTube. Thank you, Zachary. China's exports of rare earth magnets to the US in June soared to more than 7 times their May level, marking a sharp recovery in the flow of critical minerals used in EVs and wind turbines after the Sino-US trade deal. Outbound shipments to the US from the world's largest producer of rare earth magnets surged to 353 metric tons in June, up 660% from May. Data from the General Administration of Customs showed on Sunday. That came after a pact reached in June to resolve the issues around shipments. I mean, the gist of this is that China restricted rare earths shipments, which is critical to a bunch of industries in the US. And then after a deal was made behind closed doors, we don't know what was the promise on the other end. China resumed shipments, but this all goes to show that many industries in the US depend on rare earth shipments. Very small parts for the overall product, like a car, let's say, but the very critical part of it. And it's mostly refined in China. So it just goes to show the dependency on the supply chain. Let's move on. Tesla's easy money from regulatory credits set to dry up amid weakening sales. A key driver of Tesla's profit is disappearing fast as the US government changes policies on the environmental asset known as regulatory credits. Investors are likely to have a number of questions for CEO Musk when Tesla reports second quarter results on Wednesday. Among them are how fast the EV maker can turn a trial robotaxi program into a money-making business, how to avoid a declining sales for the second year in a row, and Musk's possible political plans. Less sexy, perhaps, is the issue of regulatory credits, which are bought by traditional automakers from EV companies to make up for the tailpipe pollution from their gasoline-powered vehicles. But this income segment is crucial for Tesla's finances, having been the main driver of its profit for the first 3 months of the year and for many years. Without the income from those credits sold to internal combustion engine automakers, Tesla would have reported a first quarter loss, and Musk may have pressed to say how long he thinks Tesla will be able to sell credits. US government incentivized zero-emission vehicle production by giving credits to EV makers while imposing hefty penalties on combustion engine vehicle manufacturers that fail to meet emission standards. The traditional automakers can avoid the fines by purchasing credits from companies like Tesla. Recent legislation passed under US President Trump, however, is set to eliminate fines for automakers that fail to meet National Highway Traffic Safety Administration's corporate average fuel economy standards, which underpin much of the demand for these regulatory credits. They are making commercial ICE vehicles more competitive while making EVs less competitive, said Bat Odrigal, a director at the Energy Policy Research Foundation, referring to Congress, Trump, and the federal government. Tesla risks losing revenue from the credits as well as market share, he added. I mean, we're talking billions of dollars of bottom line profits, really. The future of two other sources of credits from the US EPA and California Zero Emission Vehicle Program is uncertain, which propose rule changes and political and legal challenges. That is recently likely to be a big loss of revenue for automakers that were selling credits, added Chris Harto, a senior policy analyst at Consumer Reports. Tesla has reported more such sales than anyone else in the automotive sector. One question for Tesla is how fast the credit sales are falling and whether the EPA and California transactions are holding up for now. I don't think so, because many other automakers also have a bank of these credits. So since these are going away, I don't know why they would buy any more. So I think we're going to see a pretty sharp decline in credit sales revenue, at least from US. I think Tesla gets some revenue still from China, credit sales in China and also Europe. But I think in US, we're going to see a pretty sharp fall down. Now, this is coming also at, thank you very much. Zachary just sent a $4.99, $5 super sticker. Thank you very much, Zachary. I appreciate your support. Now, all this news, negative news on the credit sales front, and a bunch of other fronts, frankly, is coming on the heels of increased competition as well. Because the EV credits are going away, many of the traditional automakers are trying to liquidate their inventory of EVs before these credits go away. And they're doing it with low lease prices. And you can see one of them on your screens. Volkswagen is practically giving away the ID4 with leases as low as $99 a month. So adjusted for gas savings, that's basically free. Volkswagen is advertising ID4 leases starting at just $99 a month. It's hard to find any car lease these days for under $100 a month, but for $45,000 electric SUV, it's almost unheard of. So $99 a month, gas savings, plus also you don't take on the depreciation of the EV, and we know Tesla's depreciated quite a lot lately. And so I don't know why somebody wouldn't take this deal. And we've seen many other offers like this as well. This is an electric article. Volkswagen offers ID4 leases as low as $99 a month. The Volkswagen ID4 was the third top-selling EV in the US in January after the 2025 model year went back on sale. Volkswagen's electric SUV starts with $45,000 with an EPA estimated driving range of 291 miles. So some of these, many of the vehicles that traditional automakers came out, when they first came out with their EVs, they were much worse than Teslas, right? They had, 200 miles range, maybe even sometimes less than that. They had very slow charging. Some of the non-Tesla supercharging stations weren't really available. But today, that's not really the case. Even in Toyota's case, Volkswagen and many others like Hyundai, Kia have very good EVs at this point, pretty much as good as Teslas. for much lower prices. So this is not something that's going to change. Even also in China, the EVs are actually better than Teslas for much cheaper prices. So I don't think this competition headwind is going to go away anytime soon. With or without credits, doesn't matter. It's available in 5 different trims. The base 2025 VW ID4 Pro rear-wheel drive is equipped with a 282 horsepower from a single rear electric motor. Inside, it features 12.9-inch infotainment system, dual zone climate control, heated front seats. I actually sent this to someone I know to potentially look into it soon. Upgrading to the AW version will gain a tow hitch and additional 53 horsepower for a combined maximum of 335 horsepower. It's a pretty good looking vehicle too. Somewhere between, I think the capacity is somewhere between, the internal volume capacity is somewhere between Model 3 and Model Y. California dealership Volkswagen Garden Grove has the 2025 ID4 Pro rear-wheel drive listed for lease at just $99 a month. The offer is for 24 months with $209,095 down, which is not much. According to the dealer, the offer includes a $5,000 cashback bonus good on a new ID4 purchase or lease. We thought the 2020 Electric says we thought the 2025 Hyundai Ioniq 5 was a good deal with the leases starting at just $179 a month. But for $99, that's a steal. I agree. Now, Mercedes, on the other hand, is slashing its prices as well. So Volkswagen, Mercedes, Hyundai, a bunch of other vehicle manufacturers are slashing they're trying to liquidate their EV inventories. $15,000 cheaper. The Sweepy EQE and EQS sedans and SUVs get a big price drop ahead of the planned production pause. Mercedes dropping the price of its controversial EQ and EQS models in the US. The 2026 EQE sedan and EQS SUV, EQS sedan, EQS SUV get big discounts. Let's read the summary on this one. Mercedes haven't quite captured the imagination of world customers, etc., etc. Let me see if there's anything else. Price cuts. Okay. Now, on the other hand, on the used front, you can get a used Mercedes EQS EV for Toyota Camry money. Mercedes-Benz EQS, a luxury electric sedan, has depreciated rapidly, with used prices starting at around $30,000, a third of the new price. Despite its impressive features and range, the car's unique design and high repair costs may deter some buyers. However, with a valid manufacturing warranty, the EQS could be a worthwhile purchase for those seeking a luxury EV experience, according to Inside EVs. And Chevrolet's next-gen Bolt EV adopts familiar profile spy photos. This is the spy photo. They just changed some of the rear and the front and kept most of the tooling for the manufacturing to save money. Lucid, and even the autonomous front, we talked about that in the last episode briefly. Lucid, Neuro, and Uber partner on next-generation autonomous robotaxi program. Uber, Lucid, and Neuro are partnering on a global robotaxi program using Lucid Gravity vehicles equipped with Neuro's Level 4 autonomous system. The program aims to deploy 20,000 or more vehicles over 6 years, starting in a major U.S. city next year. The partnership combines Lucid advanced vehicle architecture, Neuro's proven autonomy, and Uber's vast global network. This goes to show, again, there's going to be many players that provide robotaxi rides, and I don't see how Tesla is going to charge economic profits per mile that Tesla bulls assume. U.S. Auto Safety Agency shedding more than 25% of employees. U.S. Auto Safety Agency NHTSA is losing over 25% of its employees under the financial incentive programs. The agency, part of the Transportation Department, is shrinking from 772 employees to 555. Consumer advocacy groups urge lawmakers to drop proposed cuts to NHTSA's budget, citing concerns about the agency's ability to conduct rulemaking, enforcement actions, and research. Now, on company-specific fronts, I think some of the home builders announced recently the results, although were bad compared to last year, they weren't as bad as compared to expectations. So let's kind of read through that a little bit. Home builder stocks, including D.R. Horton and Pulte Group, rose after their quarterly results beat analyst expectations. D.R. Horton's revenue and earnings per share were $9.23 billion and $3.36 respectively, while Pulte's were $4.4 billion and $3.303. Despite positive results, both companies acknowledge ongoing affordability constraints and cautious consumer sentiment, impacting new home demand. Also, I didn't include this article, but I saw Goldman Sachs lowered its price expectations for 2025 to 2026 to basically break even from, I think, 4 or 5% increase previously. And I actually think that prices will go down in the coming years, unless we get some deep rate cuts, which I don't really see happening. Earnings, GM stock sinks on tariff hit Coca-Cola to launch cane sugar soda. Second quarter earnings is a full swing, and the results have been larger positive so far, with more positive surprises than negative ones. Companies had a lower bar to clear coming into the quarter as analysts tempered their expectations amid President Trump's tariffs. Stocks lost valuations and uncertainty about the health of the U.S. economy. This week, investors will get a glimpse of how corporate leaders are navigating these challenges, with 112 S&P 500 companies reporting results, including GM, Coca-Cola, Alphabet, and Tesla. Data from FactSet published Friday showed that with 12% of the index having reported results, analysts now expect S&P 500 companies to report a 5.6% jump in EPS during the second quarter. Heading into the quarter, analysts expect the S&P 500 earnings to rise 5% in Q2, which would mark the slowest pace of earnings growth since the fourth quarter in 2023. Let's read that again. Slowest pace of earnings growth since the fourth quarter of 2023. Coca-Cola beat Wall Street's second quarter revenue and profit estimates on Tuesday as steady soda demand and higher prices boosted profits. See, this article doesn't talk about the US dollar weakening tailwind, which is actually pretty large for a company like Coca-Cola. Notably, the company said it plans to launch an offering made of US cane sugar under, no one cares about that. GM, US automaker GM stock fell over 3% before the bell on Tuesday after reporting a fall in second quarter core profit of 32% to $3 billion. The automaker said tariffs have sapped $1.1 billion from the results as it continues to grapple with President Trump's challenging trade war. I think they estimated $3 to $5 billion annual hit to earnings from the tariffs. And so that's in line. $1 billion a quarter is in line with that. I'm going to dig into GM earnings and maybe publish an article tonight or tomorrow on that. Sherwin-Williams cuts its outlook as soft demand and costs hurt profits. Let's read the summary on this one. Sherwin-Williams shares declined Tuesday after the maker of paints and coating missed profit forecast and cut its outlook on soft demand and higher costs. The company expects the slowdown to continue into the second half of the year. Thank you very much, everybody. And I will chat with you all tomorrow. Take care.